What's up everybody? Welcome to the Stocks channel. Friday on SPY we were down 0.57%, but a lot of that was just due to the ex-dividend date. If you look at the SPX, which is the S&P 500 index, not the ETF, we were really kind of flat on the day, and on the SPX we are still outside this upper Bollinger Band. So don't put too much weight on this pullback. Even though it is a price action pullback, we need to acknowledge it's mostly just due to a dividend that's going to be paid out. Now on the daily chart, as I've said many times, this is a bull trend until it's not, and while this is a very vertical rally, you have to respect it as long as we continue to stay above critical support zones, and those critical support zones at this point remain 467, down here right around 462, and the most critical support will be right around 458. As long as SPY is above 458, meaning even in the event we come all the way back down to 458, if we bounce from there and continue higher, this is still a very powerful bull trend that is going to be very difficult to short in. Now, if we break down below 458, then there's a much better chance we're coming down towards 451 and eventually this gap fill down here at 441. And yes, I have a very strong degree of confidence that gap is going to get filled. But if I told you it wasn't going to fill until February of next year and we were going to continue blasting higher and then all the way back down to this gap fill, you can see how that could still be very difficult to short for that gap fill in the short term. Because in the short term, we could have another month of upside before we have any downside. So if you do want to short this rally, you need to have a realistic expectation of how long it could take for this rally to stall. And that's why I always say let the price action do all the talking, because you're going to have a much simpler time shorting or exiting your long positions at the proper time by simply letting the price action show you it's time for the market to roll over and start that pullback. There's not many rallies you're going to see this strong and this powerful, but a lot of that is largely due to the fact that we had a very prolonged correction within a bull market. And when you get those prolonged corrections, you have to view it as everybody that wanted out of the market had already sold at that point. And when the market runs out of sellers and starts to find buyers, you're going to get these very vertical rallies because there's just nobody left to sell. And there's a lot of cash on the sidelines that is going to start jumping in when the market is looking a lot more bullish. And that's why when we got that bull breakout in the middle of November, we really started to see the rally continue to go parabolic because a lot of that money was flooding back into the market for fear of missing out. So I do believe a lot of the short sellers have been squeezed at this point, and a lot of that cash on the sidelines has been coming back into the market. And because the market loves to cause the max pain to the majority, once all of that cash comes back into the market and once all of those short sellers give up, I do think we are going to see a sizable pullback back down towards this gap fill at 441. So don't completely give up on this idea. It is going to happen, and it's likely going to happen within the next 2 to 3 months. But again, as I always say, be aware of the possibilities and let the price action guide you. And the price action has not told us yet that it's time to short this market. Now, if you want to take some low risk opportunities outside the upper Bollinger Band, just keep them low risk. And the lowest risk you're going to get is when we're outside the upper Bollinger Band near these price targets at 475 and between 477 and 478. Now, if we start to lose support, you can use a break of support as a risk level of newfound resistance, and that would be the breakdown below 467, 462, and of course 458. On the NASDAQ 100 triple Qs, we were up 0.48% on Friday, and the triple Qs had a slight tick of volume going higher as we're continuing to close outside the upper Bollinger Band and closing above that price target at 404, which is increasing the probability we're going to the next price target at 408. Now keep in mind, if we get above this level at 408.71, that is a brand new intraday all-time high for the NASDAQ 100 triple Qs. If you want to short the market, I think a breakdown below 404 could bring us back down towards this gap fill below 399. And below 399, the critical support the bulls need to hold is right here, right around 391, meaning even if we went all the way back down to 391, that is very likely just a retest of the breakout before we continue to all-time highs. So if you're shorting, it's going to remain a difficult market while we're above support. That's why usually bears wait for support to break before they assume the market is rolling over, because this is a bull trend until it's not, which is very evident by the price action. This is a market lacking sellers and finding strong support at a rising 20 daily moving average and just continuing to climb higher. So yes, a pullback is coming. We just don't know when, and that's why we're going to let the price action do all the talking here. In the Dow Jones, we were down 0.19% on Friday, and again, the Dow Jones is getting overextended, but it is possible we push higher towards that price target at 376, and at some point, I do believe we'll see a retest of this breakout at 363 to 360, and that would also be a test of the rising 20 daily moving average if we can go there soon. Now, if we break down below 360, it's likely that we're coming back down towards the 340s, and we do have gaps to fill to the downside in the 350s as well. So there's plenty of gaps to fill, and these gaps will likely fill, and we're likely going to see a weak first quarter in the next year. But again, we need to follow the price, and even though we could be aware of these possibilities, we need to let the price action do all the talking. On the Russell 2000 IWM ETF, we were down 0.84% on Friday, and we're still overextended, and we do have this gap to fill right here, right around 193. So if we pull back and fill that gap, look for possibility of buyers in that support zone between 191 and 193, and there's a very good chance the small caps are trying to push into the 200s, so this remains a very bullish market in the small caps as long as we can continue to hold above these support levels and make higher lows and higher highs. Next upside resistance on a break of 191 will be 201, 203.5, and 207. On the ARKK ETF, we were down 1.75% on Friday, and we do have a gap to fill down here right around 50, and the resistance to break for the bulls is going to be 52.3, and then we could push higher towards 54.5 and 56.8. If we break down below the gap fill at 50, look for the next support at 48, and if we break below 48, we're coming back down towards 46. On the VIX, we were down 1.6% on Friday, and the VIX is starting to see the Bollinger Band squeezing as we continue to grind along the bottom of the Bollinger Band as those bands are getting tighter and tighter, which means there is going to be a chance for a very large move in the VIX. And as we approach the end of December, I think there's a good chance we could start to see some tax loss harvesting or people simply just rebalancing the books for the next quarter. And I do believe that is going to lead to volatility, which is at least going to allow the VIX to spike up towards 15 before the end of the year. So I am going to make this prediction because I want you to pay attention to the VIX. And if we start to see a spike in the VIX out above 13, there is a very good chance, in my opinion, the VIX will be up around 15 or 16 before this year is over with. On Bitcoin, we're currently trading right around 42,500 as Bitcoin is trying to decide if it wants to break out above this wedge that is forming or if it's going to break down below the wedge. And this is a very simple trade if you just have the patience to wait for the breakdown below support or the breakout above resistance. I'm calling the break above resistance the break of this previous high at 44,000, and then I do believe we will run to 47,500. However, if we break down below the bottom of the range and outside the wedge to the downside, we need to break down below 40,000 to 41,000, and I do believe if that happens, we'll come back down towards 38,000. So view this as a break of the range to the upside as a bullish trade, and if we break down to the downside, you're looking for either a bearish trade or simply exit your longs and look to buy at lower support zones. On Nvidia stock, we were up 1.12% on Friday, and I still think there's a good chance we could find resistance right here in the 480s, and that could take us all the way back down towards the 430s and 420s. So I still view Nvidia as a trading range. If we zoom out, I think we're going to be locked in this trading range until we get a very clear price action breakout above the top of the range at 504 or below the bottom of the range below 403. If you know a lot about the fundamentals behind this stock, I think it's very unlikely we break out to the downside. So even if this prediction plays out and we come down into the 430s and 420s, I do believe if you're bullish on this stock, that would be a buying opportunity and not time to panic. So if you're bullish on the stock, I don't think you need to worry too much. Just keep in mind it's likely going to go a whole lot of sideways as we digest a lot of the very bullish move we've had for the majority of the year. And I do believe there's a very good possibility we could have one more leg lower before we go back for that bullish breakout and try to push towards 600. So I just want you to understand longer term, I am still very bullish on this stock and it still has a very bullish configuration. I just think it went very far, very fast, and it's been consolidating a lot of those gains, which is why it's been locked in this trading range. And I don't believe we're out of this trading range just yet, but we'll let the price action do all the talking. And that's why I would wait to get bullish on either lower prices and lower support or the break of the top of the range above 504. And then that will tell us we're getting ready to move higher. On Tesla stock, we were up 0.98% on Friday, and Tesla is continuing that breakout of the top of the range. And I told you above that breakout, we should see 255 and then 260. So I'm not changing a thing about that prediction. As long as we're above this support at 244, those are the price targets. If at any point we break down below 244, you need to ask yourself, why is that happening? Because that's not a bullish indication. And then in that scenario, we'll likely come down towards 230 and the gap fill at 225. On Apple stock, we were down 0.27% on Friday, and we're still trying to hold this breakout above 197 as these Bollinger Bands expand. And if we can hold the breakout and we can stay above 194 and 197, we'll be looking for the next price target up there at 204. If at any point we break down below 190, that is a bearish breakdown, and it means we're likely coming down towards the gap fill at 186. So jumping back over to the S&P 500, there is no doubt we are getting a little overextended to the upside across the board. And as we approach the last couple of weeks of trading, there's a very good chance we're going to see a spike in volatility, which could give us a decent enough pullback to hit some of these lower support zones. But as I continue to remind you, during bull markets, it's going to remain difficult to call a top and to short a bull trend. So even though we can be aware of a pullback or expecting it, it doesn't necessarily mean it's the best trade to short it. As always, as long as you're managing your risk around these critical levels, you should do just fine no matter what kind of trades you're taking. But in general, you're going to have a much simpler time trading in the direction of the trend. And that is why I always tell you the trend is your friend. Be aware of the direction of the trend, and that should guide you of whether you're buying at support or trying to short at resistance. And during a bull trend, more often than not, you're going to have more success simply just buying at support levels and then locking profits as we go higher as we approach resistance levels. So get into that flow, and the market is an ebb and flow. You need to get in the right rhythm of the trend. And if you're not winning on a lot of your trades, you simply just need to zoom out and understand if you have a bias that is affecting your trading. And you need to identify that bias and fix it as soon as possible and let the chart and the price action do all the talking. Once you follow the chart and the price action only, you're instantly going to become a better trader. And that's why I always tell you to block out that noise and only listen to what the chart is telling you. We are absolutely crushing this market on Bank Trade Alerts, continuing to make brand new all-time highs. And I'm very confident next year we are going to crush the market yet again. Now is a great time to join Bank Trade Alerts. And if you want to come crush the market with us, you can find out how to join Bank by clicking on the link below. I also have the Stock Channel Discord where I do intraday updates and analysis, so if you're interested in that service, you can find out how to join it below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.